The markets have recently undergone a seismic transformation after election, and Harry, this could be a turning point for your portfolio. What does this mean for your investments? And more importantly, how can you capitalize on these changes with the right ETFs? Let's dive in and explore. Harry, we're going to uncover the sectors poised to benefit the most, the 3 ETFs that should be on your radar, and a crucial warning you can't afford to miss. Stick around. This could reshape your entire investment strategy. And trust me, Harry, you don't want to miss the critical insight I'll share at the end of this video. It's something that could impact the market and your portfolio in a big way. Harry, let's look at what's been happening in the markets. Recently, the Nasdaq surged over 3%, the Dow Jones climbed 3.1%, and the S&P 500 added 2.5%. But here's what's even more exciting. Big tech companies like Nvidia and Google posted gains between 3% to 4%, while Tesla skyrocketed nearly 15%. Even more surprising, financial stocks saw incredible momentum, with JP Morgan, Goldman Sachs, and Bank of America rallying between 10% and 15%. These kinds of moves are rare, Harry, and they signal enormous opportunities for smart investors like you to capitalize on this market shift. If you were to invest $100,000 today in one of these ETFs, which has delivered a historical average growth rate of 12.96%, your investment could grow to an impressive $4 million over 30 years, with annual dividends of $50,000. The Amplify CWP Enhanced Dividend Income ETF, DIVO. The Amplify CWP Enhanced Dividend Income ETF, DIVO, is an actively managed fund that combines high-quality, large-cap companies with a history of dividend growth and a tactical covered call strategy. DIVO's market price is $42.65 per share. The fund has an expense ratio of 0.55%, which is relatively low for an actively managed ETF. DIVO's portfolio includes approximately 25 holdings, focusing on sectors such as information technology, healthcare, and consumer discretionary. Top holdings feature companies like Microsoft Corporation MSFT, Apple Inc., AAPL, and Johnson & Johnson, J&J, each constituting around 4% of the portfolio. These companies have demonstrated consistent dividend growth and strong financial performance. Over the past 5 years, DIVO has achieved a compound annual growth rate, COGR, of approximately 8.5%. The fund's payout ratio stands at 75.6%, indicating that a significant portion of earnings is distributed to shareholders as dividends. DIVO's dividend growth rate over the past year is 8.3%, reflecting its commitment to increasing shareholder returns. Assuming DIVO maintains its historical CAGR of 8.5%, a $100,000 investment would grow to approximately $225,000 after 10 years, $506,000 after 20 years, and $1,139,000 after 30 years. With a current dividend yield of 4.36%, the annual dividend income from a $100,000 investment would be about $4,360 in the first year. If dividends grow at an annual rate of 8.3%, the annual dividend income would increase to approximately $9,600. After 10 years, $21,200 after 20 years, and $46,800 after 30 years. DIVO's strategy of investing in dividend-growing companies, combined with a covered call approach, aims to provide investors with a balance of income and capital appreciation. The fund's focus on high-quality, large-cap companies with strong financials contributes to its potential for long-term growth and increasing dividend income. The Avanti's U.S. Small Cap Value ETF, AVUV. The Avanti's U.S. Small Cap Value ETF, AVUV, is an actively managed fund that targets U.S. small-cap companies with high profitability and value characteristics. AVUV's market price is $106.39 per share, with a net asset value, NAV, of $104.70. The fund has an expense ratio of 0.25%, offering a cost-effective option for investors seeking exposure to small-cap value stocks. AVUV's portfolio comprises approximately 700 holdings, diversified across various sectors. The top sectors include financial services, 28.90%, industrials, 18.49%, consumer cyclical, 16.13%, and energy, 14.34%. Notable holdings are Matson Incorporated, MATX, at 0.93%, GATX Corporation, GATX, at 0.93%, and Alaska Air Group, Inc. Mature, ALK, at 0.93%. These companies have demonstrated strong financial performance and align with the fund's value-oriented strategy. Historically, AVUV has delivered a compound annual growth rate, CAGR, of approximately 10.39% over the past 3 years. The fund's dividend yield stands at 1.65%, providing investors with regular income distributions. Assuming a consistent growth rate, a $100,000 investment in AVUV would grow to approximately $268,000 after 10 years, $718,000 after 20 years, and $1,925,000 after 30 years. With the current dividend yield, the initial annual dividend income would be about $1,650. If dividends grow in line with the fund's CAGR, the annual dividend income could increase to approximately $4,422 after 10 years, $11,847 after 20 years, and $31,736 after 30 years. AVUV's focus on small-cap value stocks with strong profitability metrics positions it as a compelling option for investors seeking long-term capital appreciation and income. The fund's diversified holdings across various sectors and its emphasis on companies with robust financial health contribute to its potential for sustained growth. Let me introduce you to the ETF that makes this $4 million possible, with annual dividends of $50,000. Vanguard S&P 500 ETF, AVUV. The Vanguard S&P 500 ETF, AVUV, is a prominent exchange-traded fund that seeks to replicate the performance of the S&P 500 index, encompassing 500 of the largest U.S. companies. VUV trades at $550.55 per share. The fund boasts a low expense ratio of 0.03%, making it an attractive option for cost-conscious investors. VUV's portfolio is diversified across various sectors, with significant allocations in information technology, healthcare, financials, and consumer discretionary. Top holdings include Apple Inc., Microsoft Corporation, Amazon.com Inc., and Alphabet Inc., reflecting the index's heavy weighting towards large-cap technology companies. Over the past decade, VUV has achieved a compound annual growth rate, CAGR, of approximately 12.96%. Assuming this growth rate continues, a $100,000 investment could grow to approximately $338,000 after 10 years, $1,142,000 after 20 years, and $3,858,000 after 30 years. VUV has a dividend yield of 1.29%, resulting in an initial annual dividend income of about $1,290. If dividends grow in line with the fund's CAGR, the annual dividend income could increase to approximately $4,360 after 10 years, $14,730 after 20 years, and $49,800 after 30 years. Vanguard, the investment company behind VUV, is renowned for its commitment to low-cost investing and investor advocacy. The company's unique structure, where fund shareholders own the company, allows it to prioritize investor interests and maintain low fees. But remember, investing isn't just about picking the right funds. It's about staying the course, reinvesting your dividends, and letting the power of compounding work its magic. The decisions you make today can shape the financial freedom you enjoy tomorrow. If you found this video helpful, don't forget to hit the like button, subscribe to the channel for more actionable insights, and turn on notifications so you never miss an update. Let's keep building your portfolio together, one smart decision at a time. Thanks for watching, and I'll see you in the next one.